Welcome back. Well, Bandhan Bank shares were soaring all of yesterday. That after the Reserve Bank announced a regime change for microfinance loans. Now, I'm calling it regime change with a reason because it has freed both lenders and borrowers. The new rules remove all limits on interest rates that can be charged on microfinance loans. Also, households with income up to 3 lakh will qualify for MFI loans. Earlier, it was 2 lakh. But much more important, the earlier rules applied only to NBFC microfinance companies. The new rules apply to everyone who gives a microfinance loan, banks, cooperatives, NBFC. So the activity is regulated, not the entity. So what does this mean for the listed companies as also for microfinance activity, for borrowers? I have two experts to discuss that. Mr. Alok Misra, the CEO of MFIN, which is the self-regulatory organization of microfinance companies, and Mr. Udaya Kumar Hebbar, the CEO of CreditAccess Grameen. Good morning, gentlemen. Thank you very much for joining us. Let me start with you, Mr. Misra. According to you, what is the big game changer? The fact that banks, everybody is brought under it?
Yeah, thanks, Lata. I think the big game changer are two things. One, the RBI has moved from a micro principles to a micro business rules to a principles-based approach. The second is that it has been a level playing field, as you rightly said. It is now activity-based regulation. Now, earlier only 30% of the market was under the rules and regulations. Now the entire sector, 100% has come under that. And third is from the customer point of view, a very important aspect has been brought in by RBI, the concept of FOIR, or fixed obligation to income ratio, which ensures that if your household income is, say, 3 lakh rupees, your loan repayment obligations for that year should not exceed 1.5 lakh. I think that's a very welcome step, and that will bring sanity to the market as well as also relief to the customer.
Fair point,
And the third aspect is that on the pricing also, the Reserve Bank of India has come up with a very, what you can say, transparent mechanism of having a fact sheet which has to be given to the borrowers, which will have all encompassing annual percentage rate or the APR, which will have to be given to the borrowers. Everything has to be disclosed transparently. There has to be a board-approved policy. There will be supervisory scrutiny of the whole thing. So I think it is a very welcome move. It will expand the horizon of the financial inclusion much further, and it will also spur innovation.
Got that, Mr. Mishra. Let me get to the man who is probably going to make a little more money. You know, Mr. Hebbar, good morning. Thank you for joining. There was a CLSA note which said that a 1 percentage point increase in the spreads will push up the profit of CreditAccess Grameen by 16% as per their estimates. So an increase, so two questions really, is it going to be really profitable? And secondly, can you increase the rates?
Yeah, it is CLSA's opinion, definitely. But Lata, what was happening so far? We were pricing based on regulation rather than pricing based on the risk in this market. If you see last 3-4 years, there are 3 black swan events impacted this microfinance business for the sector, but industry was not able to pass on the price to the customer, pass on the price to the credit risk because of the regulation. Probably which a regulator realized and actually allowed that to happen, so that pricing based on risk is an important factor in the lending business. So I think this is very welcome move, which might allow the industry and then the players to price based on risk, based on territory, based on the cost of operation, instead of price based on the regulatory cap. So which was a very, very good move, which will actually definitely protect the industry from a bigger risk in the risk events. What happened in the last couple of years, which was really impacting the industry, which definitely gives some breather to manage the risk by pricing also, which was not there earlier. This facility or this provision or this policy gives us that scope. So
I agree with you, Mr. Hebbar. Just to elaborate for those who are not familiar with the microfinance rules, the fact that you had to keep your margin capped at 12% meant that you could not raise the price. Now, the microfinance companies were obviously hit by, or microfinance borrowers were hit by COVID, before that by demonetization. Normally, companies adjust it by adjusting the margins. So, risky borrowers are able to come back to the system. Now, that was prevented and enabled after the new rules. Okay, Mr. Hebbar, the other thing, your households with 3 lakh rupees now are eligible. What impact will that have? The positive could be that more loans will qualify, but the negative could be that the richer lot qualify and those with 1 lakh may not qualify. Could that be a result?
I think, Lata, majority of the loan current in place are qualifying because we have not, as an industry, we have not lent more than 1.25 lakh. Even though if you count the 50% is repayment obligation per year, it is only 62,000. Whereas the policy allows you to have a repayment of almost 1.5 lakh per month. That is why, by my strong feeling that entire microfinance portfolio existing what it is will qualify and continue to be qualifying. So that is why actually we will get the additional layer of customers as an additional potential. Today, microfinance has been restricting to 2 lakh in the urban and 1.6 lakh in the rural, whereas now it is going to be 3 lakh income customer across the geography, including rural and urban. That means at least 10-15% additional layer of households should be eligible for the microfinance. That is why it has to be quite potential for the industry.
Yes, yeah, that's exactly what I meant, that loan volume should grow. Mr. Misra, do you expect any friction at all that the cap on margins has been removed? Is there just the Reserve Bank, however, followed it up by saying that the supervisor will watch and rates should not be usurious. Do you expect any friction, or do you think both sides will be responsible?
I think both sides will be responsible. And I would say that this cost question often comes up, though this is not the central piece of the reforms which has taken place, because 70% was already deregulated on pricing, but no friction happened there. They are all lending responsibly. I think all the regulated entities will now get a framework based on a policy which will take into account their cost of funds, which will take into account their operational cost, which will take into account their risk cost, and a reasonable margin. Because at the end of the day, everybody knows that we are in a double bottom line business and we need to be responsible. So I don't see any friction. I think the rates will move up and down based on various factors like vintage of the customer, like the riskierness of the geography, and other factors. So I don't see any friction. I think it will be a market-based approach and all will benefit. The customers will also benefit, institutions will also benefit. Because I strongly feel the way the NBFC MFIs were operating in last 3 to 4 years, the smaller and medium players were already going out of their pockets. So if you want to serve the customers sustainably, the institution is also to be sustainable.
Absolutely.
And I don't see anybody jacking up the rates irresponsibly or something like that.
Fair point.
The SRO's oversight as well as the Reserve Bank's strong oversight will always be there.
Fair point, sir. Mr. Hebbar, can you give us an idea of how much the loan volume can grow in FY23 given the new rules?
So we estimate FY22-23 may not reflect this immediately because the changes will happen. Probably the normal course industry would grow between 20 to 25% on annualized growth. I think the industry will maintain that. So that is what probably Grameen also will aim to maintain that kind of growth. So which is quite decent and that good growth. Now before that, I just wanted to add what Professor Alok said. Industry have behaved as particularly MFI industry in the last 10 years have actually shown so much of maturity in terms of controlling the cost, having efficiency, productive and resilient business model. Probably that today is as a kind of legitimized as a one big business for everybody under this asset class.
Fair point.
I think this policy also is say that it's a big game changer for the industry as a legitimate one of the.
I take your point. I take your point, Mr. Hebbar. I guess the regulator took the liberty of removing the caps after watching the behavior. I take your point. So you're saying loan growth can be 20 to 25%?
Correct.
Okay, and margins can improve?
margin can improve by maybe 1 to 1.5%. So currently, it was 10% margin game. It's basically 12% was provided only for MFIs having less than 100 crores portfolio.
Yes, yes.
So for anybody above 100, it's only 10% margin.
Yeah.
It could grow by 1 to 1.5%.
Fair point. Mr. Misra, a final word on the industry or on the ecosystem. As Mr. Hebbar says, loan growth 20-25%. We didn't see any loan growth in the previous year, or rather the year before, because of COVID. A second issue is that inflation. We are seeing food prices slowly climbing. Very soon, fuel prices will be passed on. So your comment on the overall system in terms of the expected loan growth for FY23 and expected pressure on quality as incomes may be a bit under pressure.
Yeah. I think the question, I will start with your second question, the expected pressure on the quality. I think the sector is very conscious of the quality. And that is why pre-COVID, we were having 99% recovery rate. And right now also, 95% plus clients are coming back and making their payment. So they are conscious of it. And that is why in the pandemic times, the loan growth has been slow. And you will also see that the average loan ticket size disbursed has also moderated. And for the sector's growth, I think the inflationary expectations are already there, but still the loan growth has not followed the inflation trend in India, in microfinance industry. Because if you see that if we were around 25,000 average ticket size of loan, say 7 or 8 years back, we are around 32,000 right now. So I think it will not strictly mirror the inflation rate, but it will definitely grow. And the other factor more important than inflation, which will increase the loan sizes, will be because other customer segment, which we call as the lost middle, which is between 2 lakh to 3 lakh, are also now getting added up to the industry. That should spur some growth. But as Udaya says, it will take some time for systems to adjust, for them to staff to be trained and all that. So it will be a gradual.
I agree. I'm more worried about, this rural, slowdown, if you want to call it. There has been distress. So, Mr. Hebbar, a quick reaction from you. You see pressure on quality of loans?
Not really, Lata. Actually, we have at least 10% of the borrowers of the industry have struggled, probably met with an accident kind of thing that may not be able to come back. But what really we are working is with the 90% customers since last 2 years, actually. So 5% in each year have either defaulted and become written off or are completely out of the system.
Fair enough.
So the remaining who survived and are able to, about 80%, absolutely no problem, other 10% would have defaulted and come back to normalcy with the resiliency what they have. I think this 90% today in the industry are quite strong and quite resilient. We don't see any challenge now.
Okay, that is very good to hear. The industry borrowers in particular have gone through so much COVID and before that demonetization that now both sides are chastened, responsible and should be able to come out of the potential inflation that we will be facing. But loan volume definitely likely to grow. That's the word we're getting from Mr. Hebbar and Mr. Misra. Thank you very much indeed for joining us. We wrap up on this special discussion. As also on Bazaar with the news that the bulls have it, the bulls have it, the bulls have it. Chartbusters will take the action forward.